It's 5 o'clock in London. It's midday in New York, midnight in Hong Kong, 2 a.m. in Sydney, 9 a.m. in San Francisco, and 9:30 at night in Mumbai. A little bit late today, ladies and gentlemen. Sorry about that. We had a few pre-production issues. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world today. My name is Patrick L. Young. The IPO-VID live stream, Series 24, Episode 2. That's in the aggregate Episode 140. Start here. We begin, of course, with tragic architectural news. A massive fire damaging the magnificent historic Bøsen building in Copenhagen, where the Danish Stock Exchange used to operate from. It was, in more recent times, a conference centre for the Chamber of Commerce. Here's hoping it can be rebuilt to its original splendour. And indeed, plaudits to Edwin Heathcote, the architectural correspondent of the Financial Times, for a magnificent piece about historic exchange buildings the other day, discussing the Copenhagen Exchange and many other great lost buildings from the classic golden era of 19th century exchanges and before. Meanwhile, in China, China's market regulator have launched a series of measures to help rescue Hong Kong's somewhat battered stock market. There's positive news all round as big changes are looming in Hong Kong, with the Chinese regulator, CSRC, moving to help keep two-way stock trade thriving. In an element of sad news, we pass on our condolences to the family of Mark Bagan, the CEO of MIAX subsidiary Minneapolis Grain Exchange. Very, very sorry to hear about his demise. The Minneapolis Grain Exchange, of course, continuing our architectural theme, being the home to a truly magnificent cathedral-like exchange building. However, what sort of buildings do we have in outer space, ladies and gentlemen? Because that's a fascinating topic. And indeed, this week, Exchange Invest has been thinking orbital investment ahead of a fascinating London symposium on the same topic, which is organised by a former IPO-VID guest, Mark Weekly, a councilman of the City of London. That's going to be taking place on April the 25th in London, and a very, very interesting event it looks too, in the auditorium of Denton's law firm. Meanwhile, we've been dovetailing that through our Exchange Invest Weekend Edition. In our Weekend Space Special 1, we went from Vostok 1 via Gemini and Apollo to a fascinating future investment opportunity in outer space. And indeed, this broadcast is coming to you, at least from my perspective, just under 75 miles from where the original Friendship 7 capsule landed. So you can subscribe to our Exchange Invest Weekend entirely free to catch up with our Space Special 2 ahead of this weekend, and also catch the back issue of Space episode number 1, and indeed enjoy the fabulous London Space Finance Seminar, which is coming up in Denton's this week. Our guest today is Chris Skinner. The topic: do we need intermediaries? Chris is a best-selling author in both the technology and children book domains. He's an award-winning independent commentator on financial markets and fintech through his daily blog, thefinancer.com, which is updated, as indeed it says before, daily. He helped to found one of the very first mobile banks in the world, has advised CEOs and leaders from every continent of the world, including the UN, the White House, the World Bank, and the World Economic Forum. In 2023, he was recognized with the Lifetime Achievements Award by the Payments Association, the largest community in the world of payments. His latest 18th book, bravo, is Intelligent Money, which discusses the implications of generative finance as artificial intelligence takes over the world. Doubtless we'll be getting to that book in just a moment. So, greetings, Chris. You had a few issues getting here today. Glad to see you. Welcome to the show. Where in the world are you today?
Hi, Patrick. I'm in my home office, which actually is just from the center of Warsaw in Poland. And I know that you love Poland, so welcome to Boys Together in the middle of nowhere.
Test. That's all I possibly can say at this juncture. I think it's quite appropriate. Well, indeed, Poland, a fascinating economy, hugely growing. Well, we've been proud investors there for a number of years. And I do believe we also both share the wonderful aptitude of having wives who hail from that great nation of Poland, and how fantastic it is too. So, Chris, tell me, how did you get involved into finance and the fintech domain?
Well, I started out many years ago as a technologist doing COBOL and coding for various groups and companies, mainly in local government, to be honest. But then I transitioned gradually into financial services because I was given a job to sell technology into insurance companies, and I took the view that I couldn't sell the technology unless I understood the company. So I took a postgraduate degree in insurance, and since then, I've been involved heavily, not just in insurance, but investment banking, retail banking across the board through various companies like NCR, IBM, and most recently Unisys, and then became independent and doing my own thing ever since. But I've always focused upon where it's going, what's next, because I got feedback from a presentation I did, many years ago saying, tell me something I don't know. And the only thing that we don't know is what's next.
We don't know what's next. What do you think about the finance industry, though, as a whole, in terms of looking at what's next? Do you think that it's blocked in by its own linear processing?
Well, traditional financial institutions unfortunately have an awful lot of people who run them who do not understand technology at the basic level, and equally are very reluctant to take the risk of changing the core technologies that they operate upon, as in traditional mainframe processing. And I mentioned COBOL. 43% of the largest banks of the world still run systems programmed in COBOL code on mainframes. And the reason is that no one is capable of taking the risk or having the understanding of how to change those systems. And my campaign for nearly all my life has been, you have to transform your technologies on a regular basis. In fact, these days, on an ongoing basis, as a continuum. You can't just code something and leave it there and let it rot, because if you let it rot, it dies. And we've seen that happen with quite a lot of companies. And that is the challenge. How do you keep your technology, your core system alive and ready for action?
Yes, that's a very interesting point. Great to see John Falk joining us from Brussels today, I presume. Great greetings to you both, Patrick and Chris. Great to see you, John. Thanks very much for checking in. And I suppose, that's something John's been through the life cycle of several of these things as well, even long before we were around. Chris, what do you think is the kind of life cycle of technology at the moment? Is it accelerating vastly, or can you actually put a backbone together in order to manage to keep going for several years?
I would argue there is no life cycle. It's a continuum. It's never ending. It needs constant updating and constant monitoring. You know, it's a little bit like the relationship I have, for example, with my smartphone. I change my smartphone not every year, but I change my smartphone definitely every 2 years, and the main reason being is that I love taking photographs, and I want them to be as high definition as possible with the latest technology. And if I was still using my smartphone from years ago, not only would it be outdated in the apps that serve that phone, but the photographs would be not up to standard. And that's the view I have in exactly the same way with the systems in a company. And these days, because we're using cloud-based systems and network systems, we're not using systems that are internalized and static. Um, they can change overnight, almost every day. I actually know one bank that does so many updates on their system that the app store that they offer their service through can't keep up with the updates. That shows how rapidly things change.
It's quite hilarious altogether. And while John is saying thanks, Patrick, he's also adding this great comment from John Falk. Time to earn a fortune by going back to your COBOL programming expertise, Chris, because it is quite embarrassing. You're preaching the journey of the future, particularly for banks and payment companies and so on, at the epicenter of fintech, Chris. And yet there are some who shall remain nameless who are remarkably behind the ball, let us say, in terms of their technology.
Yeah, I'm actually very tempted, John, to go back to my COBOL expertise because it's in huge demand, and you can generate a lot of money by doing old code. Um, and not everyone is as bad as that, because obviously now we've got the challenger banks, the neobanks, we've got the fintech companies that are all doing plug and play Python code, etc. And what I find interesting is the juxtaposition between the old and the new. I often talk about run the bank and change the bank. So you can't just throw away what you've got, but at the same time, if what you've got is decaying and falling to pieces, you've got to fix it, and you can't fix it with just some coat of paint and some filler. You've got to actually restart the whole thing. How to do that is very difficult, and some people say the best way to do that is to launch a brand new bank, but that actually normally fails. And the reason it fails is because the brand new bank is often competitive with the existing bank, and the existing bank's management try and kill the new bank because they're stealing their customers. You've got to actually restart the bank. You've got to give it some major defibrillation, and get the heart beating again. In fact, I often talk about the old bank being a Bankenstein. It's a load of dead parts held together through electricity that looks good in the front because it's wearing a suit, but at the back it's dead to the core. You've got to restart the whole thing.
Yes, it's interesting. I mean, one of the things I always find very engaging about your blog at thefinancer.com is you come out, you preach all of these things that banks could be doing. You pick the best in classes. You talk about the absolutely world-class innovations that are going on and so on. And then you end up yourself having to walk into a particular bank, XYZ in the UK or wherever it is, and you end up in this Kafkaesque nightmare where you suddenly realize that perhaps things aren't being implemented quite the way they ought to be. It must be quite an interesting juxtaposition.
Now, someone said to me the other day that I've been saying the same thing for years, and yet no one seems to listen, which is quite sad, really. And for years, I've said, you have to reinvent the business model to be digital, and that's a business model from the ground up. And for over a decade now, I've been saying, the front office used to be a building with a human, a branch. The middle office was the infrastructure, and the back office was the headquarters with administrators and also product managers. And now the front office is apps in devices on the Internet of Things, linking into APIs in the cloud network of the world to analytics in the back office, which is where all the data lies. So it's analytics, APIs, and apps. It's no longer product, infrastructure, and branch or service. And it's no longer distribution through humans with buildings, it's distribution through software with servers. So the fact that I keep saying that, I've said it for years, it is frustrating that a lot of bank management still doesn't get it. Having said that, they understand the challenge. And one of my slides in my main presentation that I always use is Charles Darwin's quote, which is, it's not the survival of the fittest or the fastest or the strongest, it's the survival of the ones who are most adaptable to change. And I think the problem that banks have is their leadership team doesn't understand what they have to change into. They know they have to change, they know they have to be digital, but they don't understand what change into digital is and what that means. Now, I can tell them, and I've told them for a long time what I think it is. And I'm not saying I'm right, but I'm saying I'm a darn sight better than most people at getting it right.
Yes, it's very, very interesting. And actually, John Falk is on the money here, I think, with a fabulous comment. Most systems have multiple touch points, and everyone fears that the old system will fall over if they miss one of those touch points. And many still think in overnight processes. And I think that's a very apt point, because I mean, that was what I was alluding to when I said my original question in this stream, which was, so much of the business of banking finance is essentially a batch process, and it's a very, very linear function. And even in capital markets or so on, the supposedly glamour end of the whole thing, I mean, it's essentially all about get in the morning, process everything through the day, and then settle in whatever that is, T1, T2, possibly T0 if you're blessed in certain few markets, or whatever that might be. It's very, very difficult, isn't it, when you've got management teams then that have come from the ground up through the banking business to suddenly get them to rethink after they've been in the banking institution or payments institution for 20, 30 years.
Yeah, I absolutely understand the concern about risk and the risk of systems failure. And I've seen several institutions where systems have failed when they're transitioning. and the fines that follow, along with the fallout, is incredible. A good example on a retail space is when TSB in the UK, a retail bank, upgraded their systems, and actually the systems fell out for over 2 weeks. The manager lost his job, and the fines from the FCA were huge. And in investment markets, it's quite interesting because in investment banking, actually, most investment banks are very good at refreshing technology to keep up with competitive change. And we've seen that from way back when, with algorithmic trading to flash trading to where we are today. I think the critical factor is giving some autonomy to the organization. And that's where a lot of people struggle to allow technological change, because particularly in banks, they really feel they have to constrain innovation through organization. Everything has to be signed off and agreed and organized by committee. And that structure no longer works. If you look at microservices architecture and organizations like Amazon or Alibaba, they don't do things by committee. They do things by small teams, rapid change, with rapid cycle structures that are organized by those teams, typically of 8, 9, 10 people, and they can change code overnight. That's the organization that most institutions have to move towards, but most are reluctant to do that because they're worried about the risk of failure.
Yes, it's a very, very worrying point, the risk of failure and also the risk of regulatory fiat. And sometimes it has to be said that one doesn't really get the impression that the regulators are very far ahead of the technological game, if they're even up to date with the technological game, but they enjoy a good swinging fine at anybody who transgresses what happens with the technology. It's a very, very tricky situation, because I'm not really sure that any regulator has managed to keep up with what's been going on around them. What do you think?
Well, regulators only regulate what they can see in the rear view mirror. So it has to have happened. It's never going to be looking forward to what's going to happen next, because they don't think that way, and they can't think that way because they're not in the markets, they're following the markets. So you have basically a little bit like fraudsters and hackers. The fraudsters, hackers, the criminal community, and the customer and the bank all vying with each other in the main road, and the regulator sits behind and watches what's happening and then goes, "Oh, that's not good. That might cause an accident. So we're going to regulate that and bring in some structure to make sure that this works properly and effectively and protects the customer or consumer, depending on which market you're in." I think it's very difficult for the regulators. And then on top of that, more difficult for the regulator is that often they've got people who are financial management executives. They come from the institutions and they understand the markets, but they don't understand technology. And it's the same as the issue that the financial institutions themselves have. Their leaders and their regulators do not understand the technologies that are now in play. So when they see a technology come into the market, they watch it and they follow it and they try and incorporate it if it's appropriate. But they don't understand it. And that's actually really worrying right now when we talk about generative finance and the whole role of integrating artificial intelligence into financial transactions, because we're going to see some mayhem out there. The CEO of one of the big UK banks came out the other day and said AI will create the perfect marketplace for fraudsters. And that's really worrying, because criminals will now have a major gain because they do understand the technology over those who don't.
Yes, there are many, many challenges out there. And actually, we're going to get to your book in just a moment, because I think that's building on the same sort of topics in relation to intelligence, finance, and indeed what are the lacks of intelligence within the marketplace. So what do you think is the best way that legacy financial institutions such as banks really can turbocharge their way forward and become digital?
Well, the main lesson I learned in researching one of my recent books doing digital is that one of the banks, DBS in Singapore, radically changed their strategy and structure because the board gave the chief executive and the chairman the budget and the agenda to build a new bank out of the old bank in a digital format. And they said, don't worry about the return on investment and equity and all those financial factors, because the COO and the CFO will run the existing bank whilst you change the bank. And I always use this example of run the bank and change the bank, because you can't change the bank if you're limited to the existing bank's agenda. Because the existing bank's agenda has to deliver on quarterly results, which will limit your thinking. And so this was a really interesting and dramatic transformation. It took place over a decade. The first half of the 5 years being building a common platform across all countries for the bank. The second half of the decade to transform that platform to be cloud-based. And they're my favorite example of a digital bank transformation because they did it right. Whereas most banks, the board doesn't give that remit to the CEO and the chairman. They have to run the bank, deliver quarterly results, and as an outcome of that, they don't deliver the digital outcome, change the bank agenda.
Very interesting. Very interesting story about DBS in Singapore. You've also alluded to the idea that there are certain cases where banks can create a new bank within the bank, and it's and actually, I'm going to change here for a fabulous comment we've got from, I do believe, Beata Young. Hello, Chris and Patrick. I'm a great fan of Amazing Grace's COBOL, referring there to, of course, to perhaps one of the finest technologists and rear admirals at the same time, Grace Hopper, in the overall mix of programming. Very, very interesting and opposite point through the development of different languages for coding. You mentioned the idea that internally, sort of creating your own little bank cell that becomes another bank ends up just competing with the existing banks, and you end up with all sorts of issues, and neither party really wins going forward. What about full-on challenger banks? Because I mean, we've seen quite a few of those over the course of the years, and a lot of them have either ended up being very quickly snaffled up by the opposition or something like that. And I mean, some of them seemed spectacular. Certainly, they were amazing models. You introduced me to a great evening one time where we met the CEO with a group of people of Fedor Bank, which was an absolutely stunning model. Talk to me a little bit about these sorts of challenger banks. How can they succeed, or indeed, why can they not succeed, or how are they not succeeding?
Well, back then with Matthias Kroner, who was the founder CEO of Fedor, I was using a comment regularly, which is old banks have billions of capital, millions of customers, and centuries of history, whereas new banks have almost no capital, almost no customers, and a few years of history. And that's their challenge, that they're new and they don't have customers or capital. That's changed because the ones that have been successful, and you can name them like Monzo or Bunk, N26, Nubank, they now have history. They've been around for over a decade. They do have millions of customers. Monzo, 9 million customers, which is almost ranking them up there with NatWest, who have 14 million. In the UK, Revolut has 40 million users. So they're pretty revolutionary. And so, things are changing, and they're changing pretty rapidly. When I say that this is just over a decade old, and I often use the poster boy of fintech, which is Patrick and John Collison, who created and founded Stripe, a merchant checkout API system for online purchasing and merchants. And they started in 2010. By 2016, they were a $10 billion company. By 2021, they were a $95 billion company. They're now a $65 billion company, which is the ups and downs roller coaster of the fintech revolution. But even so, if you look at their numbers, they're still much bigger than a Deutsche Bank or a BBVA or an ING for a company that's only 15 years old. And the reason for their value is because they're not just getting good customer traction, but they are a global platform,
Yeah.
and they work, not just in a domestic operation, but in a cross-border operation worldwide. And an awful lot of banks, if you look at most banks, they're very domestically focused or regionally focused, or they don't operate globally. They operate regionally. The biggest banks in the world, like JP Morgan Chase or Citi, or Deutsche, who I've mentioned, the only global aspect of what they do is maybe cross-border payments.
Yeah.
And Stripe does that far better and far cheaper and far quicker, which is the reason why they're worth $65 billion after a few years.
Well, it's a very interesting point you raise, because we're used to this concept of global businesses. And I would say someone like, for example, Daimler are a global business, because you can buy a Mercedes almost everywhere. And even where they're not distributed, you invariably find that some tin pot dictator always uses one as his limousine when he's driving around whatever his capital is. And indeed, finance companies, while they're talked about as being global and they may have a footprint on all the continents, they don't tend to actually be in a vast number of countries. I mean, certainly not as many countries as, say, information providers like historically Reuters or Bloomberg have been in, or indeed, as you mentioned, Stripe, which is a very, very interesting point altogether. I want to actually just ask a quick question here, which is coming from Beata. Chris, given your advocacy for digital transformation and the limitations of outdated technologies like COBOL, what do you see as the next revolutionary product beyond AI? That's a great leap forward.
Well, that's kind of the question, and what's the next big thing? And I stopped talking about the next big thing some years ago, because there isn't a next big thing. There's just the continuum of change, and change is the only constant. But at the moment, what I talk about mainly is decentralized finance versus centralized finance, which is cryptocurrencies versus CBDCs, central bank digital currencies. And I think that's a very hot topic. Equally, I talk a lot about AI, generative finance, and the way in which money thinks for us instead of we having to think about our money, because things will be managed on our intermediary. We've spoken a lot about intermediaries for decades. I think we're finally reaching the point where that's a reality. But the next big thing over that horizon is obviously quantum computing, which confuses me because I still don't understand Schrodinger's cat. Do you understand Schrodinger's cat, Patrick?
I get the plot of Schrodinger's cat, yes, but it's quite fascinating. Two things at once. Is the cat's both alive and dead simultaneously. And it's certainly, if you apply Occam's razor to Schrodinger's cat, you have problems. Hashtag It's complicated.
Well, my understanding is that there was an experiment done by this scientist Schrodinger, which put a cat in a box with some poison in the box, and you only know if the cat's alive or dead if you open the box, because you don't know whether it got the poison or didn't get the poison. And that's what quantum computing is, which is it can be 1 or 0 or both at the same time, depending on the moment of time. Which is why it confuses me, because I don't really understand that science. But I've seen a quantum computer. I was at Davos a couple of years ago, just name dropping, and went into the IBM booth, and they had one there. It's one of their early prototypes. But that's going to be intriguing when that becomes reality, because then when we get to that stage, at the moment we have to process systems on a 1 or 0 binary basis, which limits compute capacity. But if you move to quantum, which is based on this idea, the cat's dead or alive until you open the box, it can run, 100 times faster on a system compared to the system we have today. So 100 times faster systems. What would that deliver to us? We yet to see, but there are some banks experimenting in that space, and in fact, IBM has brought together a few banks to do those experiments. So it's a place to watch.
It's a very interesting place to watch indeed. Another place that's very interesting to watch, I'm going to give you a chance to grab a glass of water here, Chris, because you've been talking non-stop for the course of the last nearly half an hour, is, of course, the incredible movement towards, well, we've seen it as we were celebrating during the course of March and International Women's Day and so on, the rise of senior women executives across finance and particularly in the exchange world. This year, we put together a video to celebrate our 5 key women executives of 2024. And let me add, they were not chosen by me. They were chosen by an all-female panel of Exchange Invest staff. Enjoy. This is something you can catch on our TikTok every day and indeed also on other short video streams such as YouTube and Instagram. These are our Women of 2024. Meanwhile, in Big World in 2024, Exchange Invest proudly celebrates the achievements of 5 trailblazing women in exchanges. Nasdaq CEO Adina Friedman is driving innovation and paving the way for women in finance while revolutionizing Nasdaq as it invents tomorrow. NYSE President Lynn Martin is a beacon of brilliance. Data maven, derivatives guru, and now the doyen of Wall Street's most famous institution. The Kazakhstan Stock Exchange's CEO, Alina Aldenbergian, has shown unwavering dedication and groundbreaking innovations, propelling 30-year-old KZ to ever greater heights. Bonnie Chan has transformed Hong Kong Exchange's listed market, championing diversity in finance ahead of her elevation to group CEO in recent months. And Anne Berg broke barriers as a grain exporter and member director of CBOT, paving the way for women across the commodity markets. Those are our Women of 2024. For more in Big World, like or follow. Well, there you go, ladies and gentlemen. Those are our Women of 2024. So we give a brief chance for some respite to our guest who's been talking away assiduously about all sorts of things so far. Chris Skinner, thank you very much. Also, let me say Jonathan Cowan. Once again, LinkedIn's API is trying not to work with our software for some reason, and therefore, thank you for saying hello, Jonathan. It's great to see you. I hope all is well in your world. At this point in time, John Falk says his head hurts now. Well, I think at my point, the point that was being made in the galley, actually, as we were just watching that video, was that perhaps the issue with Schrodinger's cats is a multiple of the 9 lives that the cat has in the first place. Let's not even go there. It's totally confusing. Thank you very much for your added comment, John. If you like this show, please give us a like, ladies and gentlemen. It really helps the AI algorithms understand what's going well about this particularly interesting show as we chat with fintech guru Chris Skinner. So, Chris, you mentioned at the moment the fact that you're in this interesting position of talking a lot about DeFi and centralized finance and so on and so forth. Tell me one thing. I mean, how does DeFi really work, given the fact that we have an incredibly centralized legal system going forward?
So the argument, and I've had it for a long time, going back to Mr. Falk, Cybos in 2011, I think was the first time that we in the innovation stream were talking about cryptocurrencies and Bitcoin. And the argument's gone on ever since then, which is you cannot have decentralized finance because it has no government. And the argument from the financial markets and from me is the only way you can have currency is if you have government. And the issue with the libertarian who says, I want to decentralize and in my control, is I'm a statist or a statist, depending on how you want to pronounce it, because I believe in centralized government. And my argument back is, no, I do not believe in centralized government, but I believe you have to have government and governance. The question is, who is the government? So in a decentralized financial model, the government is the network of the people. And if that's who you believe in, then you have a currency that is regulated and managed by a decentralized network of people. It's if you trust that and believe that works, then that's an investable asset, which is Bitcoin or its brethren. There's now over 2,000 cryptocurrencies. So there are so many. It's what do you believe in? What do you trust? And that's exactly the same with centralized currencies. What do you believe in? What do you trust? And in a centralized model, you might say, I believe in the US dollar. Well, the US dollar is the biggest Ponzi scheme in the world because the Federal Reserve doesn't have the assets to back the US dollar with any real assets. But you believe in the US government because in God we trust. And maybe you think the Federal Reserve is God. That's what you believe in. So it's your belief system that manages the structure of currencies and controls. The main thing that I believe is really interesting with decentralized currencies, it does not recognize regional federal governments. It doesn't recognize borders. It's the network of the people globally on a platform versus most currencies, the euro, the yen, the yuan, the US dollar, that are run on the network of a government based in a city. And that's where the friction lies. And I think that friction is coming to a head, and definitely it will be a battle for control over the next decade. And I think because the horse has already bolted from the gate, the decentralized model is actually gaining favor over the centralized model.
Very interesting angle. I'm reminded of the great comment by Jeff Sprecher, the boss of ICE, who is himself a great digital revolutionary in the field, pointing out the fact that it intrigues him that so many people are willing to invest in a currency that was founded by somebody called Satoshi Nakamoto that nobody actually knows who he is in the first place. And then they're all willing to go and jump in the back of a car driven by a stranger because Uber said it was okay, or stay in a stranger's flat because Airbnb have sanctioned it. So the most important point of most of that is the fact that you end up with exchanges throughout the course of e-commerce. Anyway, another great comment from John Falk here as well. Yeah, go on. Go ahead.
Just say that, Patrick. You mentioned Satoshi Nakamoto, and it always reminds me of that scene in Spartacus, which is a classic movie.
Yep.
And basically, I am Satoshi, and then someone says, "No, I am Satoshi. No, I am Satoshi."
Absolutely, yes. Now, I've actually taken to introducing myself as someone who may have been writing about this 25 years ago, but I'd like to point out that I'm one of the few middle-aged males who doesn't claim to be Satoshi at any point in time. It's quite a hilarious situation altogether, Chris, isn't it? Another comment from John Falk here. It's really, really fantastic. Thanks very much for being with us and so active today, John. For me, with artificial intelligence, if I could have visualizations in real time of processes where I can move data, objects, and use speech to control as well with my hands, that would be a developer's dream, if you get my drift. Sounds very exciting, Chris, doesn't it?
Well, there's two aspects to AI. I mean, we're already halfway there with transactions, in that you could, if you were working with the right bank, visualize any transaction and know exactly where you were, what you were doing, what you were buying, and why, through a touch. And that's pretty much there already. But the other half of it is actually more to do with advising you about things that you could be doing that would make your account more efficient. Um, Return on investment, leverage, and the whole way in which you think about the way in which you're using money. And that's where I'm coming from, which is it goes a lot further than just what I call personal financial management or information management. It goes into much more delegation of authority. So actually, the machine can do everything for you rather than you having to do it yourself. I've got to the stage, and I don't know about you, Patrick or John, but I've got so many accounts that I've got running on apps on my phone. I've lost track of which one is which and where they're at and what the balances are. And I want to have that consolidated, aggregated, integrated through open AIs, open banking, um, uh, into an intelligent machine that shifts the money around on my behalf without me having to actually flick or swipe anything. It just does it for me. And I think we're getting there. And definitely in the investment markets, we'll be there well before the retail markets. And that I always remember saying at one conference, and it still makes me laugh actually. It was 2009, a Euro money conference. I said we're getting to the stage where treasury operations will be broken into apps, so that any idiot in any CFO's office can, with a swipe, net and pool and FX money anywhere in the world in real time. And I was given 1 out of 10 for my speech because everyone thought I was an idiot, and yet that's exactly what everyone does these days. So that's the future I see, where we don't even have to do the swipe. Netting, pooling, and FX, and everything in the world of corporate treasury and transactions is just managed by a system.
I hear you there. Over 20 years ago, I can remember being on CNBC on their breakfast squawk box and pointing out the fact that the big trend that they needed to think about in geopolitics was going to be the rise of China, which would take place all the way through to about 2025. And they all laughed at me. They said it was complete and utter nonsense whatsoever. Wouldn't have any impact on the world. They said, what nonsense you talk about. The European Union will take over everything, blah, blah, blah. Anyway, interesting comment from John Falk. Yes, Chris, hopefully the AI can suggest these different options. And we've got a fabulous question from Women on It. Women on It will be back with their show tomorrow in the same networks, but a slightly different place, obviously different URL. Considering the principles of swarm intelligence, do you believe this model holds promise for informing and improving governmental decision-making processes?
Well, I was actually writing over the last couple of days about the way in which we are going to get to perfect market knowledge, and this question, feeds into that. There's arguments for and against perfect market knowledge, and I don't know what the answer is. In that, I think we're almost there, and flash trading, for example, demonstrates that with proximity-based servers and everything that goes around, real-time processing. But even if you have perfect market knowledge, do you actually have a competitive marketplace? And that's where everyone has always argued to say you cannot have perfect market knowledge and a competitive marketplace. It's the next sort of generation of where we're going with technologies and technological markets. In terms of governmental decision-making processes, I don't think it comes into it. I think the governmental decision-making is too consensual based, because it has to be by the nature of most governments. But if you looked at decentralized finance again and the network of the people as the government, then the network of the people could be real time, whereas the network of the domestic government is never real time. It's always after time. And so that's a really good question. It's a very interesting discussion around perfect market knowledge, decentralized decision making versus centralized decision making.
Fabulous question. Great answer altogether. Thank you very much, Chris. And thank you very much, Woman on It, for that excellent question. Thanks to Jonathan Cowan. I'm just reading this off a side device. I would agree with you, Jonathan. Jonathan's saying that the most important thing for innovation at the moment is that we make sure that we have logical steps and not have great rushes forward like we did with blockchain, which of course has ended up very, very badly for certain players in established finance, such as the Australian Stock Exchange. And indeed, he's echoing what we're saying. My opinion is the same. Use for AI for advising and alerting on everything, scams, etc. Thank you very, very much for that, Jonathan. Really, really helpful. Let me just dive off at this juncture to our book of the week, ladies and gentlemen, as we let Chris get himself a drink. So we've been talking about the space economy. What better book to have for the space economy than The Space Economy by Chad Anderson? He's a leading VC in the field. He looks at the incredible orbital and beyond possibilities of what's there in the space economy, something which, of course, if you've played something like, I don't know, one of those fantastic things of Sid Meier's Alpha Centauri, for example, you were probably aware of the course of the last 25 years, at least in gaming terms. But here is a book that starts to outline the bases of what could be an absolutely incredible economy in space, and therefore links in very neatly with Mark Wheatley's excellent initiative this week that's taking place in London. Don't forget, you can get the details of the book of the week from Exchange Invest Weekend. That's free at exchangeinvest.com. And if you'd like some hardcore further discussion about what's happening in the future of markets, particularly in the world of exchanges and financial market infrastructure, then don't forget you can also sign up for Exchange Invest via exchangeinvest.com and get the daily water cooler of the bourse business as read by the leaders in all of the world's capital markets and exchanges. So, Chris, it's a very, very interesting situation. You've been talking about a lot of things, and actually what we have done is we have synthesized quite a lot of the data that comes together in your latest book. But tell us a little bit about it. It's a fascinating topic of money.
Yeah, I mean, it started with the discussion that we've been having around decentralized versus centralized money, cryptocurrency versus CBDC. And in the middle, ChatGPT came out, and artificial intelligence exploded onto the scene as mainstream, whereas before it's always been much more of an idea rather than an actual reality. And so, artificial intelligence in money became quite a discussion within what I was having as developing the books, chapters, and discussions alongside the metaverse and all the other things that we all are aware of. And you know, there's a number of things that came out of that dialogue. I won't give the whole game away, but you know, I've already given some of it away, which is I believe there can be decentralized finance as long as there's government and governance, which is the government and governments of the people on the network. Within an AI community, that can then be automated into an intermediary that we've always looked to achieve, but never have achieved so far. But we're getting very close to it, and it goes way beyond automated financial management. It's actually intelligent financial management because the money thinks for you and does things on a delegated basis on your behalf without you being involved, and equally informs you of everything about every transaction if you ask for the information. So you can delve deep into where you've been, what you've been doing, what you've been buying, and why, on a real-time basis, or 24/7. And then within that, looking at so what's the outcome of that for banks and intermediaries? And the answer is, do we actually need banks who are intermediaries between the government of the people or the government of the country? And when you look at CBDC or cryptocurrencies, what role does a bank have in that system? And my answer is that whether it's the metaverse, AI, or crypto or decentralized finance, or CBDCs and centralized finance, you will always need to have an intermediary, which might sound strange, but 30 years ago I was saying you don't need intermediaries, and then I've been proven wrong on every occasion, because I thought they were an added expense in the mix. Whereas what I've discovered is actually, if you have a trusted intermediary who's got a license and an insurance to protect the value that you exchange with them, and particularly the insurance is a critical factor, then you can get your money back. Whereas that will never happen if you don't have that licensed intermediary. And a good example is Sam Bankman-Fried with FTX.
Yeah.
You look at that exchange, that's a decentralized currency being used on an exchange, but an exchange that's not licensed, it's a Ponzi scheme. You lose all your money, you can't get it back. So I always believe there's a role for a trusted intermediary. And that's the critical point outcome, I guess, of where I come from with whether it's AI, metaverse, or decentralized finance.
I've got to say, I couldn't agree with you more, actually, on that point. And in fact, I mean, going all the way back to here, I mean, 25 years ago, coming up for his 25th birthday on the 1st of July, folks, Capital Market Revolution. The one thing I was
never heard of it.
saying there, yes, nobody's ever heard of it.
Who wrote that?
Who wrote that?
I don't know.
Can't remember whatsoever. But the thing that was interesting then was that actually that was quite funny, because there was this zeitgeist in Web 1.0 where everybody was saying, that's it, it's the end of all intermediaries, blah, blah, blah. And I was willing to stand there and say, no. If you can add value as the intermediary, then you will survive. And adding trust is, let's face it, worth an infinite amount of money, as exactly you say everybody discovered when Sam Bankman-Fried went spectacularly bust. And how scary it is that some US politicians and even regulators were toying with his idea of how to clear and settle the whole financial instrument sector, which would have been chaos. I mean, quite appalling altogether. So, it's a great point, Chris, when you look at how intelligent money can be, how much it's going forward. And it's a fascinating book that you've put together. John Falk has a couple of great comments here. Yes, he notes these used to be called sweep accounts. Absolutely, John. I think the point is, is anything really new under the sun? I mean, it's like twin spark technology that was all the rage for Alfa Romeos 30 years ago. That was actually something they invented in about 1902, but they couldn't actually manage to get the old-fashioned blocks to work, and it was only when they managed to get CAD/CAM, and therefore they could have perfectly integrated blocks for the engine, that they were able to get twin spark to work. It's true. Automated AI-based sweep accounts. Those are the things that I suppose we're calling for in many, many ways. John also got a great comment. Given Chris's recent problems in identifying himself to his bank, what are your suggestions or solutions to solve the problem, Chris?
John's obviously been reading my blogging, so I've just had a huge issue with my bank, basically because they started to question the transactions that I was making, some of which they thought looked a little bit suspect, and maybe I was money laundering, which I wasn't, honestly, Gov. Hands up. But basically, what I was doing is I was drawing down money from Coinbase, which is a exchange for cryptocurrency, into my account, and typically the transaction would be around £10,000. And as soon as you do a £10,000 transaction, then it starts to be on the alert for SARS, suspicious activity reports, and particularly if you do it more than once, which is what happened with me. And so, get a call from the bank, go through a long conversation. Finally, it gets to the nitty gritty, which is, what are you doing with Coinbase? Where did the funds come from? When did you invest? How did you invest? I said, well, look, I put the money in there like 10 years ago. I've got no idea how to demonstrate to you what I'm doing. I don't get statements from Coinbase, etc., etc. And we ended up in a bit of a standoff. So I just switched my bank account to another bank, which is quite easy. I debanked my bank rather than debanking me. But I thought that this is ridiculous because it's so heavy-handed. And it's basically, again, the way in which a bank responds to regulation, because the FCA in the UK had cracked down on transactions, and particularly crypto and money laundering, and the bank therefore had just implemented this black and white process with no grey. And my answer would be also AI in banking, which is raise suspicious activities, either fraudulent activities looking like someone might be hacked, or somebody doing activities that might be fraudulent, as in money laundering. But recognize the flow and the speed and the regularity and the history of the relationship with the customer, and handle it in a much more sensitive way. The way in which I was handled by my retail bank is a phone call from some gump on a call center who was interrogating me for an hour about what I was doing on my bank account. And I'm going, well, look, you don't have the right to interrogate me this way, and this is ridiculous. It needs to be much more intelligently and sensitively handled. Otherwise, you alienate the customer. And for anybody in Britain, and actually worldwide, but it came to the head in Britain with Nigel Farage and Coots, the consequences of an angry customer are massive, because the bank, Coots, through the media, has been named and shamed due to debanking Nigel Farage, and I've done the same on my blog, and will continue to do so, because I think it's disgusting the way in which banks behave in such a heavy-handed, blunt manner, because they interpret rules very badly.
And I applaud you for what you've done with the Financer.com blog in that respect, because you've always been very, very happy to call banks out. And indeed, it seems to me that banks are busy trying to hammer all of their clients into the same box with Schrodinger's cat at all points in time. You're certainly not allowed to move outside that box in any way, shape, or form. And once you do something that seems slightly odd, they decide that that's an abhorrent process and you must be money laundering, which is a sort of very short board of Monopoly or something like that, where every other square is go to jail and the alternate squares are you must be money laundering. So at this point, Chris, I think we've reached the apotheosis of the show. We've talked about your book. We've talked about the exciting world of why we do need intermediaries, but indeed they have to inspire trust and do something for what they're doing in order to stay as an intermediary. Tell me, where do you think, Chris Skinner, the capital market revolution goes next?
Well, I'm working on a couple of themes around sentient banking and perfect markets. And I think we have reached the point we haven't got there yet, but we are getting there, where you could have a intelligent bank with perfect market knowledge transacting and trading worldwide, and the only thing that will limit that bank is speed. And I've always been fascinated by proximity trading and server structures, and I kind of wonder where that's going, which is if everybody everywhere was linked globally in a nanosecond, what would that mean for capital markets? That's my question I'm trying to answer right now.
Well, there's a cliffhanger to leave us on, Chris. Thank you very, very much for that. It's been a fabulous show altogether. Great to have Chris Skinner of thefinancer.com coming here. Next week, our show is going to be modernizing the Saudi markets, modernizing Tadawul, with our guest, Roland Bellegarde. He is, of course, someone who's very famous as having been a leading figure within Euronext and NYSE Euronext back in the day, and also most recently has been advising the CEO of the Tadawul Stock Exchange in Saudi Arabia as they get to grips with what is an incredible revolution taking place within their nation, not just neon, but the capital markets and much, much more. Once again, thanks. Great show today with Chris Skinner. Catch his book. It's absolutely fabulous. It's a must read, ladies and gentlemen, as are the previous 17. Never a dull moment with Chris's very, very prolific writing. He's at thefinancer.com as well. Thank you very much to all of those who've engaged with us today, in particular, Beata Young, Woman on It, Jonathan Cowan, and most of all, our mutual friend, John Falk. John, I hope you're well, and I hope to see you soon in Brussels one of these days. Ladies and gentlemen, this has been a fascinating episode discussing Do We Need Intermediaries of IPO-VID. We'll be back, same place, same time next week. Don't forget, you can catch Exchange Invest through the week. And don't forget that space special coming on Saturday, which is entirely free on the EI weekend. My name is Patrick L. Young. I wish you all a great week in life and markets.